Everyone, welcome back to your own channel, Quantum Math. So we were covering chapter GST, and let's continue with our third video on the same topic, and we will cover today the input tax credit ITC, the concepts, rules, and some problems related to this topic. Today's learning objectives will be understanding what input tax credit is and why it exists, knowing the conditions for claiming ITC, applying the ITC utilization sequence, and solving some problems. So the government actually gives you money back on GST you paid while running a business. So if you are a business owner and you have already paid some money in the form of GST, then government returns it to you in the form of this ITC. So before GST, a manufacturer would pay excise duty on raw materials. Then when he made the product, he will pay VAT on the full sale price, including the raw materials value he already paid tax on. So this was tax on tax. To simplify this and to remove this cascading effect, government came with this GST. So GST fixes this through ITC, because ITC is very important to remove that cascading tax over tax. That's why it exists, first of all. So here, when a dealer buys goods, he pays for GST, right? Whenever a dealer is paying, purchasing from the manufacturer, he is paying GST. And what we call this? We will call it input GST. Whatever he is paying to the manufacturer, that is known as the input GST. We have already covered this topic. So we can call it as ITC as well. This is input tax credit. We can call it input tax credit as well for time being. So when a dealer sells goods, he will get output GST, right? Whenever he is selling something, after he will get output GST from the consumer or second dealer, to whomever he is selling the goods. So he will get an output GST. There will be a difference between these two, right? Because he will not be selling it at the same price. So he only deposits whatever the difference is there to the government, right? He only deposits whatever is the difference. For example, input GST, he has already paid 100, but as an output, he is getting 120. So 120 minus 100, he will pay 20 to the government, because he is already having this ITC, input tax credit ITC, he is already having from the manufacturer. So he can claim that 100, and he can say that I got 120, already I paid 100, and now I am remaining with 20 rupees, I will pay that 20 rupees, that's it. Got it? Simple as that, right? Okay. So imagine you are having a online platform to sell goods. For example, Flipkart. So you buy 100 phones from Samsung, right? So you will pay 1,80,000 rupees GST to Samsung. So this is your 1,80,000 is your GST, right? This is the, for time being, you can call it as ITC. Now you sell them to the customers online, and you collect 2 lakh of GST from the customers. So what is the remaining amount? 20,000 is extra that you are getting as GST. So that 20,000 you will pay, because you are already having 1,80,000 as ITC. So 20,000 you will pay to the government. That's it. Got it? Okay. So this is. So there are few conditions to claim the GST. So first of all, you should have a GST invoice, tax invoice. If you have done some transactions, you might have seen, you will get GST invoice over email, right? So that should be there. First of all, the invoice should be there to claim that. If you are not having the invoice, gone. If you are not having invoice, you have to pay it one more time. Okay. Then you should have actually received the goods and services. You have to prove that, okay, we have received the goods and services, that's why we have paid the GST. And also you have to apply for the GST returns. You might have heard this term, applying for GST return. So if you apply for GST return with all these invoices and all, then only you can claim that. Got it? So a dealer registered under composition scheme cannot claim ITC. Okay, this is one more important thing. A dealer registered under composition scheme cannot claim ITC. This may come in your MCQs. Fine. So let's discuss the sequence. For example, we might have paid the tax to the central government or the state government. Now, while claiming, it's not necessary that okay, we might have got the GST from center or state, right? There might be different scenarios. So let's discuss these scenarios, how we have to prioritize, or how there is a utilization sequence of the ITC. What is that? For example, if you have a IGST credit, when will you get the IGST credit? Whenever there is a interstate transaction, right? IGST means whenever you have done a interstate. You are in Telangana, you are getting your goods from Tamil Nadu, Kerala or Gujarat, then you have done a transaction known as interstate and IGST is involved in that. Got it? Now, once you have paid IGST, you have got IGST credit. The ITC related to this is known as IGST credit. So, how can you use that? First of all, if you are having a transaction again related to IGST, then you can claim. If you are not having IGST anymore to claim, then if you are having CGST, you can do it then. Lastly come the state. Understood? First is IGST, then CGST, then SGST. This is the sequence we should follow, right? So again, if you are having a center, only a credit of center you are having, then you have to first pay to the CGST claim, right? First you have to utilize that at CGST, then IGST. Okay, you can't use it for SGST. If you are having a credit of center, you cannot use it for state. Is it clear? Very important point. If you are having SGST, you can use it for SGST first, then IGST to claim, but you cannot do it for CGST, center. You can't do it for central GST. Hope this is clear. Got it? So it's written here, CGST credit cannot be used for paying SGST. SGST credit cannot be used for paying CGST. They are kept separate. Only IGST credit can be used across all the three. So whenever interstate is happening, that's why the government is giving you a IGST credit, because you can utilize it anywhere. That's why. Understood? Great. Now let's do one problem, then you will understand it better. A dealer in Jaipur bought a blanket from Panipat, that is Haryana, for 9,600 rupees, sold it in Jaisalmer, that is Rajasthan again, for 11,000 at a 1,400 profit. Here GST is 5%. First we need to find net IGST, CGST, SGST payable at Jaipur and the cost price for end user at Jaisalmer. Got it? Here let's break it down like this. First into two transactions. Transaction 1. What is happening at transaction 1? A interstate transaction is happening from Jaisalmer, Rajasthan and Haryana. Interstate. So once interstate transaction is happening, what is the type of GST you are claiming? You are paying IGST and at a rate of 5%. IGST at a rate of 5% to be paid. This is very crucial. Then how much is that? If it is 9,600, then you will have IGST of how much? 480. 480 is your IGST. Fine. Now this is done. Second transaction, which is intrastate. In intrastate, you have both IGST as well as, you have both central and state, CGST of how much? 2.5%, half of the total GST, and plus state of 2.5%. However, you cannot divide 480 into 240 to 240 because there is a profit which is involved here. So the selling price is 9,600 plus a profit of 1400, which will be a total of 11,000 is the selling price. On 11,000 output, if you take out 5% of it, then it will be 550. Output GST is 5% of 11,000, which is equal to 550. So you can write output CGST equal to half of it, rupees 275, and SGST. Don't get confused in these terms, SGST, IGST, CGST. Everything is related to this particular term, interstate or intrastate. Got it? So is this clear? How much? And one more thing, what is the cost price of this person for the end user? The end user cost price will be 11,000 plus 550. So that will be 11,550. Got it? Okay. So now how I will claim this first of all during this second. Why it is not getting? One second. Yeah. If I am now, see this, how the sequence what we have discussed just now, the sequence of utilizing the IGST will come into picture. So first of all, this dealer has paid a 5% of IGST, that is 480. So he has got a credit of 480 rupees, right, which is in the form of IGST. Now afterwards he has got CGST and SGST. So how he will pay off that? Let's see with the help of this table. First of all, 11,000 he has already paid 480 in different state, that is Haryana, right? But he has got a credit of 275 he has got CGST and SGST after selling it in same state, Rajasthan, and he has already paid 480. Got it? Now how he will do the offset? By the sequence, whenever you are having a IGST credit, you need to first clear the, if you have got IGST credit, first you have to use it for IGST. If you are not having IGST, then you have to use for center, then for state. This is the sequence. Okay, so he has got a credit of IGST here 480. So he has not having any IGST here. So what he'll do? First he will utilize for the central GST, that is how much central he has received, 275. So 275 he will use the offset, total 275. Now for SGST also 275 he has got GST, so but he has only 205 remaining from his credit. So after removing this 275, this 205 he will pay towards the SGST credit. Okay, so after doing everything, what is remaining? he is not having any IGST to be paid to the government, not any CGST to be paid. However, he has to pay a 70 rupees which is payable towards SGST. Understand? Because SGST was the last in the sequence, so he was unable to pay everything towards, claim everything on SGST. 70 was remaining, that's why he has to pay that balance due to in the form of SGST. Is that clear? You can take a screenshot of this if you like. Okay, great. So now let's move on and do one more problem on this. What happens when you have excess of ITC? ITC excess will be carried forward to the next month. Okay, so how this happens? For example, Mr. Sharma, registered dealer, bought a goods of 1 lakh rupees and he sold 50% of those two in 60,000 rupees, which is in intrastate transactions. Here, rest remains in stock. GST is 18%. How much excess CGST and SGST to be carried forward? So first of all, what we will do, we will find out how intrastate means. We have to find out how much is the CGST. First of all, how much he has paid CGST. That is half of 18, 9% of 1 lakh rupees. How much is that? 9,000 equals to rupees 9,000 is the CGST. What about state? State will also have the same 9% of 1 lakh equal 9,000. So totally he has paid 18,000 rupees as in the form of GST to both center and state. However, he has sold, how much he has sold? Only 60,000. 60,000 worth of goods he was able to sell in this particular month. So what happens? Output GST, input is this much, what he has paid already to the manufacturer. This is 18,000. Input is 18,000. What about output? Output will be, output GST will be 18% of 60,000. Okay, which will be 18% of 60,000, 6 into 18, 90, okay, 10,800. Okay, 10,800. Same, if he is doing intrastate only, then half of it is out center, 5,400, and half of it will belong to state, 5,400. However, he has paid 9,000, right? So remaining, whatever remaining excess ITC he is having now, which he is unable to claim due to he was not able to sell it. So the excess ITC, whatever he is having, will be carried forward to the next month. He can claim it afterwards whenever he is able to sell those remaining items. So carried forward equal to how much? 9,000 minus 5,400. CGST carried forward is 3,600, and same 3,600 of SGST is carried forward, which can be claimed in the next month. Understood? This is it. That's it. So we have one more topic left, like reverse charge mechanism. I will check whether it is required, it is a part of syllabus or not. If not, we can skip. Otherwise, what I'll do, I will have a small video on that, so that you will have an idea what does it mean. So that's it, guys. That's it in this video. If you like the content, please like, subscribe and share the video with your friends, because sharing is real form of caring.